And now, yeah, and now for the Fed minutes, okay? So this is a preview for the Fed meeting minutes at 6 GMT, 7 in the UK, or 8 here in Europe. This is the main event for the week. Why is it the main event for the week? Because this is the opportunity, as I see it, for the Fed, the last opportunity to give us a hint if June is really a real opportunity or not. Yes, these are meeting minutes from the April meeting. In April, things looked a bit worse. The Fed's statement back in April was cautious. On one hand, they did acknowledge an improvement. On the other hand, they did not provide any hint for a June rate hike. What could be very different this time? In theory, it's only the minutes, a protocol, what was said in that meeting. In practice, we know that the document is revised until the very last moment to portray a specific message that the Fed wants to send us. Since April, figures have been relatively positive. Wages looked strong, and retail sales, a significant portion of the US economy, they advanced very nicely with upwards revisions. That happened on Friday. We talked about that. And also, we had some Fed officials, Lecker, Kaplan, and Williams last night, as well as others, talking about June being a real option, about 2-3 rate hikes this year, downplaying Brexit fears, Brexit impact on the US economy. All the things I've said now support a June rate hike. On the other hand, we have doves, okay? Yellen, she's number one at the Fed, the chair of the Federal Reserve, and she's extremely dovish. She said that many times. She has fewer public appearances, but these are more important. Also, number 3 at the Fed, Bill Dudley, remains in the dovish camp. Dudley will speak tomorrow, by the way. Anyway, that's another reason to expect a more dovish meeting minutes to sort of push back the expectations for a June rate hike. Another reason to be worried is about the job market isn't looking that strong. I mean, the number of job gains in the NFP was not so good, only 160,000, and jobless claims are on the rise. Okay, what are we seeing now in markets? We're seeing the US dollar strengthening towards these meeting minutes. We're seeing, well, on the back of these hawkish comments. The way I see it as a sell opportunity. Now, this is by no means any kind of trade advice, but the Fed has showed us its dovish side time after time after time after time. I don't see a reason why this time will be different. Yes, there are hawks on the Fed. Yes, we had one member voting for a rate hike, and Esther George, and she's not alone probably. In terms of, I mean, the wider Fed members, not only the voting ones, but the doves are in control of the Federal Reserve, and they do not, they usually prefer erring on the side of caution, waiting. As I see it, given these hawkish comments, we've seen a rise in rate hike expectations. I think I've shown you this chart. I'll show it to you once again. As I see it, there's a good chance for a disappointment. Now, it's important to remember a few things for this preview for the Fed minutes. First of all, the level of liquidity is relatively low. It's only the US Open. With all due respect, there's a bit more liquidity in Europe, and especially when there's an overlap between Europe and the US. That means that an initial reaction could be relatively strong, but then we could have analysts digging deeper into the document, the meeting minutes, and we could see a second reaction in Tokyo and a third reaction in the European Open. Let me show you the rate hike expectations once again. You can see it. That's right here. Okay, so we had, I think I was showing this to you yesterday. We had chances of a rate hike standing at around 3-4%. After these Fed members talked, it was reached 15%. Still, markets have lots of doubts about chances of a rate hike, but they're significantly higher. If we move towards December, now the chances are about 70% chance for a rate hike in December. And even the first rate hike, according to bond markets again, is for a rate hike at the beginning of November. This is, of course, not realistic. Not only do we not have press conference and fresh forecasts, but we also have the presidential elections. So, yeah. Anyway, the market has shifted towards a more hawkish stance, a stronger dollar, lower stocks, thanks to these comments by Fed officials. Also, as a sort of preempting, front-running the Fed minutes this evening, I believe that they will err to the side of caution, remain dovish, cautious, wait-and-see mode, no rush to raise rates, and that the dollar could reverse its gains. Now, I may be, of course, totally wrong. If we do get a more significant hawkish tone and talk about a rate hike, it could fuel the dollar, give it more room. So I would say it's sort of a binary event. It's not that one scenario. I mean, the markets have moved towards a more hawkish stance towards the US dollar, but it's not fully priced in. It's, I would say, a bit similar to what we had last week with the RBA, or 2 weeks ago, when markets were in doubt. That mean that anyway. What I'm trying to say for this evening is, if the Fed is hawkish, it's good for the dollar. If the Fed is dovish, it's bad for the dollar. Nothing is fully priced in. Okay, I would say it's 50-50. Okay, so that's the preview for the Fed today. As we can see, the dollar extends its strength this morning. The biggest driver is higher expectations for a more hawkish Fed because of those comments from Williams, Lacker, and Kaplan. But the meeting minutes have much more impact and should give us a verdict. Okay. Again, my tendency, my bias is that we have a sell opportunity on the US dollar because the Fed usually goes dovish in most cases, but I may be wrong. And yeah, that's it. Okay, so that's the preview for the Fed meeting minutes.